While markets spent the first half of the week awaiting the U.S. Federal Reserve's decision on interest rates on Thursday and Friday, all eyes will be on April's reports on business activity in the European and the U.S. economies. The U.S. Central Bank is widely anticipated to keep interest rates steady. Thus, the focus of market participants will shift to April's data on NONFARM payrolls. Notably, recent statistics have shown persistent inflationary pressures in the United States, contributing to a broad rally in the dollar. The greenback was in a particular demand against the Australian and the New Zealand currencies today, as these assets serve as a liquid substitutes for the Chinese yuan. The yen also extended weakness, as intervention by Japanese authorities had a limited effect. However, fresh economic data could spark sharp trend reversals. Let's explore which reports will catch traders' focus at the end of the week. You are watching a video review of the macroeconomic events. Experts anticipate a steady decline in the Eurozone manufacturing activity, with the PMI reading remaining below the 50-point threshold that separates expansion from a contraction. Judging by forecast, improvements in this sector are unlikely. The Eurozone manufacturing PMI index is expected to stay in a negative territory, as was the case in March. In addition, weak demand for industrial products will have a negative impact on the volume of purchased resources and inventory levels. If manufacturing activity in the region shrinks further, the euro is likely to suffer losses, pressured by stronger U.S. economic data. The euro and other counterparts of the US dollar could come under pressure from data on the US initial jobless claims. The weekly number of Americans filing new claims for unemployment benefits is forecast to increase to 212,000. This would indicate softening labor market conditions and drag the US dollar down. However, the key factor that could add to market volatility is the US jobs data to be released on a Friday. Last month, the US economy unexpectedly added a sizzling 303,000 jobs, marking the largest monthly gain in 10 months. Against this backdrop, the US dollar index gained strong upside momentum. Given that employment gains in the United States remains elevated by historical standards and continue to exceed the critical threshold of 70,000 to 100,000 forecast of a 243,000 increase, could also contribute to rally in the US currency. The dollar could suffer losses only if non-farm payrolls fall to around 150,000 or below. The week will be capped off Friday with the data on business activity in the US services sector, and this report is likely to have a severe impact on the US dollar exchange rate, considering that the services PMI fell to 51.4 in March, indicating the weakest growth in 3 months. Any reading above this level will act as a driving force behind the dollar's rally. Moreover, if the index comes in at or above consensus estimates, the greenback will most likely enjoy strong gains. The week will be capped off Friday with the data on business activity in the US services sector, and this report is likely to have a severe impact on the US dollar exchange rate, considering that the services PMI fell to 51.4 in March, indicating the weakest growth in 3 months. Any reading above this level will act as a driving force behind the dollar's rally. Moreover, if the index comes in at or above consensus estimates, the greenback will most likely enjoy strong gains. How it will going to be in the short term in financial markets, we will definitely tell you in our news releases. Don't miss them. Subscribe to our channel and follow news with us. So see you soon.